Welcome back. Well, if you haven't started your taxes yet, now is a better time than ever for this year at least, and even for next year. To help find out about tax write-offs that could save you money and more, we got a lot of info coming your way. I'm joined by Jeffrey Schwartz. He's the Executive Director of Consolidated Credit Counseling Services of Canada. Now, Jeffrey, let's start with taxes right here and now for this season. What do we need to know? How can we save some money? Where are those write-offs that nobody knows about?
Well, you know, it's just common sense. I mean, there's a lot of things that we don't think about that we've spent on over the course of the year. Maybe it's for our child's education. Maybe it's for our own education. We've taken out a student loan. The interest on those loans are deductible. Education costs are deductible. Ultimately, we want you to see your tax advisor for some of these things, but it's really important to take note that there are many different things out there, investment credits, all that sort of thing. They're going to help you, but you really have to be organized about what you've done over the course of the year, put everything aside. Those are things that when it comes time to do your taxes, when it comes time to prepare your filing, make sure you've got everything organized so you know you can do that.
So are you saying, it's sort of a gray area in this industry as well as other industries, taking clients out or potential clients out or having a lunch with somebody from the same industry as you, does that constitute a tax write-off possibly?
It depends on how you're set up in terms of your employment. Definitely. I mean, we've got a hot housing market in Toronto, so there's a lot of real estate agents out there, and one of the things, they're effectively self-employed. So if they're entertaining clients as a result of trying to generate business, yeah, potentially those are some of the deductions that they can take advantage of. But they have to be able to prove them, so they do need the receipt. They do need to know who they went out with and was it used to generate business for themselves.
Now, let's look at longer-term solutions here. Should we be preparing for next year already, for 2013? Again,
it's all about organization, and if you do it from day one, if you do it from January 1, 2012, then you're starting perfectly. And what I like to say to people is get a bunch of envelopes together. Do whatever it takes to organize yourself. Maybe it's a collapsible file system, but start filing away your receipts, start filing away those things that indicate where you've spent your money, because ultimately, when it comes time to doing your taxes in 2013 for 2012, you're going to be prepared and everything's going to come easy. Look, I don't like doing my taxes. I'm not sure that there's anybody who does, but truthfully, if I'm organized, it probably takes about a fraction of the time, maybe 1/10 of the time, that if you're scrambling around at tax deadline time to try and find all these receipts so you can claim those deductions.
Okay, I'm going to make an admission to you right now, and Reverend Canada, you can listen to this. So the fact is, I've sporadically filed taxes, and then it's come to the point now, I do have files labeled 2010, 2011, 2012, where I put all my receipts and everything else, but it's intimidating now. I can't remember which year I filed and which year I didn't file, and also, there's just a bunch of receipts in these files. What can I do, first of all, to find out what I need to file, and second of all, what do I need to do to organize these files to make a job easier for an accountant, or do I just take those boxes there and they do it for me?
Well, I mean, it could be a bit of everything. They can do that for you, but it takes a little bit more time, and hence you're probably going to pay for that service. But you're not alone. First off, you're not alone. There are many people out there, for whatever reason, and in some cases when they come to Consolidated, our counselors are hearing this, they're afraid. They don't know what years they have, much like you, but in a lot of cases, they probably just haven't filed at all. And in most cases, a lot of these people are due refunds. So it's an actual benefit for them to have filed as opposed to not. In terms of getting yourself organized, again, think about the deductions, think about some of the things that you're going to need to file. Like, so if you have some T4s that show your statement of income, that's what you're going to need. Or a T5, say you've done some investing over the years and it's returned some benefits to you, you need those sort of things. Any RRSP receipts, those are going to help you in terms of reducing your tax burden.
Okay, well, one quick last question. When we're talking about stuff like RRSPs, I have a chunk of change. I can either put them in RRSPs or I can invest. What should I do?
Well, you can do both, actually. I mean, you can invest through your RSPs, number one. But it depends on you. For me, I'd rather maximize my RSP because it's going to reduce my tax burden, and at the same time, it's going to allow that chunk of change to grow tax-free for my retirement. Perfect. And important right now.
Thank you very much, Jeffrey. That wraps up our show for this morning.